The federal government is scrambling to contain the fallout over the collapse of Silicon Valley Bank, the largest U.S. bank to fail since the 2008 financial crisis, the second biggest bank to collapse in U.S. history. Silicon Valley Bank primarily catered to startups and technology companies, but its demise began Wednesday after concern over its cash reserves sparked a bank run by its clients. The Federal Deposit Insurance Corporation has taken control of the bank and its billions of dollars in deposits, the vast majority of which is not insured.
Well, it's deja vu in American finance. Here we go again, maybe, although we'll see how much bleeding there will be. Yeah, that is Silicon Valley Bank that ran itself into the ground in 24 hours, which has got to be a record. It went from being solvent, stable, super fine, to completely closed, no money, you can't get anything out of it. So this is, why did this happen? In a series of risk management oversights, which I love that speak, macroeconomic factors, and the good old fashioned rumor mill, Silicon Valley Bank went through a liquidity crisis causing a bank run on their deposits. So no more cash in the bank, no more money in hand. People go and take out all their funds, and the last person to get there is a rotten egg. I mean, that's what I'm understanding about this. So the stock crashed 60% through Thursday and then was halted Friday in pre-marketing trading after falling another 69%. By midday Friday, the regulators had closed SVB down and they had officially collapsed. So it seems like, and can I blame crypto for this? But this is part of what happened. They were facing $80 billion of their assets being held in securities, which have fallen in value. They've been looking to raise cash. This made markets a little nervous, but it went into overdrive when they announced a sale of stock at a loss of 1.8 billion. That came just days after crypto-focused bank Silvergate, there it is, failed, and the announcement was made with little attempt at calming investors. So that created that run on stock, people getting very, very nervous about the money that they had there. So just a little bit of background before I get comment. What is SVB? What did they do? So effectively, it was a bank that made short-term loans to new startups that were like, hey, I have an app for aggregating other apps. Sure, like, as my friend Nato Green, comedian, says, I have a Shazam for soup. Whatever idea you have, I need money for this. And so new companies and founders attached to them are seen as rightly pretty risky from a banking point of view, meaning these are all ventures that cannot get funds elsewhere, which makes many big banks wary of offering them access to banking. Enter Silicon Valley Bank, created to fix this problem. It meant their client base was very concentrated. Their cash deposits were less sticky than a traditional bank, i.e. fewer regulations, it seems. And that's because startups receive funding in order to spend it. A new company might receive 10 million from an angel investor or VC. This gets deposited into a new account with SVB, and then it is withdrawn over the next year or two in order to fund the business growth. In other, compare that to normal banks where you put it there, it sits for a long time. It's not sort of immediately used to then, sort of help a business grow. That being said, it seems like they're running short on even money to pay payroll, and a lot of folks who work in companies that have a lot of money in SVB. So that's a lot coming at you. But Aaron, what do you understand of this bank and what happened? And if we could have seen this coming, which we'll get into a little bit.
Okay, so the first that I'd ever heard of it was when it collapsed. I was like, oh, well, that bank existed. But then the more I read about it, the more I kind of started to understand the importance of Silicon Valley Bank in the tech industry, specifically the West Coast based tech industry. A lot of venture capital firms bank with them. Peter Thiel's venture capital firm, among others. I think it's really important to talk a little bit about, tech kind of runs on vibes. It's a vibes-based industry, right? And so, a lot of it is just a lot of the success of an app is hype, right? A lot of places get funding because of hype. So that's kind of how this kind of run on the bank functioned. It was a hype run. On one hand, yeah, SVB was losing deposits. It was losing money because tech companies weren't taking in as much over the last couple of years. That's kind of been cooling off a little bit. And also rising interest rates meant that bonds that they'd purchased were worth less.
Right.
So they already don't have very much cash on hand. Their bonds their assets are losing value, but they weren't like about to crash. Like they were not at any danger of collapse until certain big players in the VC world started quietly telling everybody they did business with to start taking money out of that bank. And not just take all that's over 250,000. No, take all your money out of that bank. And that person was, Peter Thiel has been mentioned a lot in the news as a person who has been, who kind of like helped instigate a lot of withdrawals from the bank on Wednesday, Thursday, Friday of last week. So I think that's something that we really need to talk about a little bit too. Yeah. We're seeing a lot of in the news. We're seeing a lot of like right wingers saying that this is a woke bank and it died because of wokeness. But yes. Anytime you hear that person is really running interference with. They're running interference for the person and people who are actually behind the run on the bank. It wasn't wokeness. It was literally some really rich guys telling their really rich friends to take all their money out of SVB.
Yeah, exactly. If Peter Thiel, if anyone says it's a woke bank, they get money from Peter Thiel, right? Like how much money can you get? And we'll get into the right wing reaction, but I think it's really important, exactly what you said. Tech industry runs on vibes. I would argue that the entire stock market sadly runs on vibes. And everyone freaks out when they hear a little whisper or a rumor or a thing, and someone who's got more money than they do, oh, they're doing a thing, so I'm gonna go there. As someone honestly who got their money in a small bank, in like a credit union, excuse me, that's a word, there it is. Yes. Like I said, small, in a small credit union in the Bay Area, that's very concerning for me because the question is this gonna bleed out to other banks, even other small banks where people are not necessarily in the tech world, but just are sort of average, folks who have a little bit of cash. And yes, there are average people who have a little bit of cash who did have money in SVB. So their money is being protected by the government. So let's get into it. The Federal Reserve and the Treasury Department said they're gonna make additional funding available to ensure all these Silicon Valley Bank deposits, both insured and uninsured, will be paid in full. The statement includes this line: after receiving a recommendation from the boards of the FDIC and the Federal Reserve and consulting with the president, Secretary Janet Yellen approved actions enabling the FDIC to complete its resolution of Silicon Valley Bank, Santa Clara, California, in a manner that fully protects all depositors. Depositors will have access to all of their money starting Monday, March 13th. No losses associated with the resolution of Silicon Valley Bank will be borne by the taxpayer. So there's a lot of needle threading in that. So yes, we're bailing out some of these folks. No, it's not your taxpayer dollars, but this is something that needs to be done. A lot of people say that it needs to be done, and others say, I think rightfully are pointing out the conversation that we're currently having around student debt loan forgiveness and the way that generally people are incredibly judgmental and reticent about people who took out money so they could go be a dentist, or a lawyer, or a teacher. So you're right. So these are conversations that are happening in tandem. It does seem that like Silicon Valley Bank will not be any longer. So it's not like we are propping up the bank. Only the government is supporting the people who had money who are not able to take them out. Again, the last person on the phone tree, if you will.
Mm-hmm. Yeah. Francesca, I was working in finance in 2007, 2008.
Fun.
And yeah, so I know. So this is the fun story time. So 2007 was like very bullish. The stock market was doing great. Everyone was like, stonks go up, even though there was some stuff that didn't quite make sense about why the stock market was doing so well. But I remember there was one day over the summer when we came to work and there was news that like some mutual bond fund or some like mortgage-backed securities fund had collapsed, and we were all like, oh, that's weird. It's like if you were getting married on a perfectly sunny day and you suddenly feel one big fat raindrop that comes out of nowhere.
Right.
Like, wonder what's gonna happen here. And then, for several months, everyone was like, nah, it's probably fine. It's probably fine. And then everything went, there's all the words that I want to say to describe what happened are inappropriate to use on this show. Everything went bad. And I think, the government's response to this to really try to calm people down by making sure that, so the money that these people are going to get, these depositors are going to have made available to them is from an insurance fund, essentially. Every bank pays into an insurance fund. And normally if the bank fails, up to $250,000 per depositor is available to cover people. But because so many of the people who were invested in SVB or had deposits at SVB had more than $250,000, like Roku, I think had like $500 million in cash at SVB. That's a lot of money. Like that's a company ruining amount of money to not have available to you. And so what the Federal Reserve, the Treasury Department, what they all did was make more of that money available than normally would be available because they are terrified that this could ripple out to other small banks. Because one thing that SVB has in common with other small banks and for other banks of all sizes is that they had low risk bond investments that have lost value in the last couple of years as the Fed keeps bringing up interest rates. So, right now, I think the Fed, the Treasury Department, the FDIC are taking a look at a lot of small and mid-sized banks to make sure that their balance sheets are not anything to be concerned with. And here in LA on Saturday, I believe, there was a run on a different bank in Brentwood. I don't know if you saw social media of it, but there was a First Republic Bank in Brentwood that people were running to take all of their money out of. And that's the kind of thing that they're trying to stop because the whole banking system collapses if every single person who deposited money into a bank wants all of their money out at the same time. And so right now what they're trying to do is say like, look, you don't need to do not go and take all your money out of the bank. The reason SVB failed is because too many people tried to take all of their money out of the bank at the same time and the bank didn't have the cash. So now, they're like, please do not go to your bank and take all your money out because if we all did that, everything would collapse. And that's catastrophic. That's a catastrophic outcome. So I think what they're doing is everything they possibly can with the resources available to them. The downside of this move is that fund that the FDIC is drawing from to protect the SVB depositors is now pretty depleted. So if it happens to too many other banks, we're gonna see some trouble.
Yeah. No, and again, let's just be real about the raising of the interest rates, right? Like, do you think that the people who can't afford homes because you've raised interest rates outside of the realm of possibility for them, are they gonna get any kind of bailout? Are they gonna get some assistance? No. This is what happens when you raise interest rates, and I guess the Fed didn't think about, business, right? But it's interesting the way when business, like sort of new tech startups, possible job creators, future Zuckerbergs who can, just gouge us for all we're worth and turn the internet into 1984. If they need help, they get the help. But so forgive me if I'm just still really pissed off that rising interest rates are terrible, but not necessarily for these fools, but clearly it was bad for this bank as well. But also for everyday people who are just trying to actually again, invest in a home or buy a home at some point. Anyway.
I hear you on that. I hear you so loud and clear on that because that's something that we're facing as a family right now. We're like, no, all right, well, never mind about that then. Yep. It's really frustrating to witness, but it's also I remember working in finance in 2008, and I wasn't working in making tons of money finance. I was working a job so I would have insurance. It was
as you do in this country.
Yeah, exactly. It was literally the place that would hire me, and I was an assistant, right? But it was so scary because there are so many people that are employed at tech companies and employed at small to mid-sized banks that aren't these, Mr. Monopoly guy running down the street with bags with dollar signs on the side people. They're just regular people who depend on the system to function for them. Right. Another thing that's kind of stuck in my craw about this is, the bank stock was tanking on Thursday and Friday, right? And on Friday we saw a couple other bank stock tank, like First Republic, like I mentioned. And what is happening as stocks tank is that it's possible for somebody to short a stock and profit when it's tanking. And there's something to me that seems completely insane about the idea that you can short a bank stock like this. Like, I think below a certain, I mean, and we're getting a little bit in the weeds here, but a bank that has below a certain amount of assets under management, it shouldn't be legal to short that stock.
Right.
Like,
well, I mean, and expand that to like the world. I mean, that's what, like, when you buy a country's debt for pennies on the dollar, you screw over an entire nation. That's happened, in this globalized world that we live in, under the IMF and the World Bank, et cetera.
For more political news breakdowns, interviews, stories of activism, and me trying my hardest to care about the occasional big celebrity news story, subscribe to our YouTube channel at youtube.com/The Damage Report. And you can ring the bell wherever it is so you don't miss anything.